Well, on our Investor Eye Corner today, we've got fintech-focused global venture capital firm QED Investors that's looking to double down on India, which remains one of its most important markets in the Asia-Pacific region. The VC has invested just under $220 million across Asia, which is primarily in India, and expects to deploy an additional $250 to $300 million in the region in the next 5 years. Globally, QED has $4.5 billion under management with more than 30 unicorns in its portfolio. It has backed Indian startups like OneCar, Jupiter, Upswing, and Refine. Nigel Morris, the co-founder and managing partner of QED Investors, joins us now to break down the investment playbook and the India strategy. Nigel, many thanks for joining us here on CNBC-TV18. India, of course, has been a core focus for QED in Asia. Start by giving us a sense of how much of this $220 million has been deployed in India across how many fintechs, and what kind of potential do you see for further investment here?
That's a great question, Ritu. Thank you for having me. We've invested about $220 million over the last 5 years here in the APAC region in general. We've invested in companies like OneCard, Refine, Jupiter. We've made about 11 investments all in all over these last 4 or 5 years. And as we look forward, we don't really allocate a certain number of dollars to the region, but we'd expect to invest $250 to $300 million over the next 5 years. I mean, that's subject to horse racing the ideas in this region against ideas in Latin America, against Nigeria, against the UK and the US, and the global stage.
All right, with more than $220 million deployed in Asia and plans to double that in 5 years, what are the sectors or sub-themes within fintech like embedded finance, Insurtech, or wealth tech are you most bullish on when it comes to India?
Ritu, you hit on a number of the major themes there. Look, so QED is all about financial services. That's all we do. So that would be wealth management, insurance, it would be payments, it'll be lending, it would be crypto, it would be banking as a service, it would be embedded finance. So we look across the full vista of all of those ideas. We tend to invest at the early stage, so it'll be seed and A, although we now have a growth fund, which enables us to get into the B to C stage. So we're interested in all of those areas. As we look at India specifically, we find ourselves really drawn to embedded finance, which we think is really powerful. We see that credit card penetration in India is extremely low. It's in the low single digits. And of course, we're drawn to the macro phenomenon that is quintessentially India of 6 and 7% GDP, the largest population in the world now, and of course, a digitally enabled, young, educated population of about 80 million people that now have earnings over $10,000 a year. So we're really long on the opportunities that exist in India, and of course, the talent pool is amazing. The tech is phenomenal. A progressive regulator. There's just lots of things to really like.
Well, Nigel, as you just said, QED has traditionally focused on early stage fintechs, but it is now actively participating in Series B and C rounds here. What will the average check size look like, and what really triggered this strategic shift?
Look, we're in our second growth fund. We had our first growth fund that was started about 4 years ago. And the logic was really simple. It was to take the top quartile of our early stage companies and be able to double down and invest in the best companies that we've already seen through our early stage fund. And about 2/3, 3/4 of the investment dollars that we have in the growth fund are follow-on investments from our early stage. So we really are taking advantage of asymmetric information. We know the companies, we've seen them go through the thick and thin, we've seen them be able to compete in the marketplace. And we have the opportunity, because of the relationships that we've built with the companies, to be able to add a bit more capital and have a bit more ownership. So it's a logical extension of the QED business model. The average check size would be about $20 million, usually without a follow-on. So there'll be something in that region. And look, we're looking for companies that are beating the rule of 40, who are at the B and C stage, who are profitable or darn near profitable, where they have grown-up management teams and really good governance and fantastic unit economics and net promoter scores that you would really feel great about. and companies that have really shown that they have that product market fit and are now scaling rapidly. And we were able to take 18 of our portfolio companies off to New York about 2 months ago, where we gave them a boot camp workshop on how to go public. And the fact that we've been able to follow our companies into the B and C stage gives us permission, in a sense, to be able to start to talk to them about what an IPO exit might look like.
Nigel, finally, let me ask you then about exits. Looking ahead, is QED hoping for a few large exits from its fintech portfolio or a broader portfolio of category-defining companies?
Look, we have a duty to our LPs to give them a solid return, and we're very focused now on looking to get liquidity out of our portfolio. We have not seen many IPOs, particularly in the US, for the last 3 years. There were not something like 60 IPOs in the US in fintech land in 2021, and there's been a very few number in the last couple of 3 years. We, by the way, have seen eToro go public. Circle is about to go public. Klarna maybe by the summer, we see just a whole range of really now very advantaged, grown-up, durable business models that are going public in the US. That will create some liquidity in the system, which I think our LPs will really appreciate. I'm a passionate believer, Ritu, that fintech actually levels the playing field, creates more transparency, enables consumers and small businesses to be empowered. Our investments in companies like Nubank and Credit Karma, in Klarna, these are companies that have changed the face of financial services worldwide. And it's just fantastic to be able to invest in so many talented entrepreneurs who are actually half of my age and twice as clever as me, who are actually going out and building these wonderful businesses.